Good morning. Welcome Beyond the SEAF Model. I'm Jack Kosar. This is effective for the week of April 20th, 2026. Let's get started. SEAF signals for this week. We retain technology and pick up materials and communication services. Technology really kind of starting to rebound, as we talked a little bit last week, starting to really peel off what we were seeing in that strategic quarter that was holding technology back, and now seeing trading week and tactical month both as one with a nice score of 7. That's a pretty good score. A little bit higher scores here on materials and communication services. Communication services coming in 2 on the trading week. Seeing healthcare kind of drop off, continue to drop off. Overall score of 30, and was the worst on the trading week. Before we get into our heat map, I wanted to get into this sector ETF Asset Flow model chart. I don't bring this one up too terribly often, but what this is just showing you what the percentage of assets invested in the 11 sector spiders are as a pie, because it makes up the S&P 500. And just wanted to kind of highlight, we're kind of getting this up, running away with technology. So why am I bringing this up? With technology now resuming being in the top, a good chunk of the overall market is, we're up over close to 27% here in terms of the share of technology as a percentage of the market. This is at an all-time high, and I just wanted to highlight this because when we see the market going up like it has been over the last week, and we're seeing that resumption in leadership from technology, and technology really is just a large portion of the market. So it's just kind of an interesting chart. This goes back 10 years, and again, these lines, while a little bit hectic and chaotic, show the 11 sector spiders and what percentage of the broader S&P 500 that they hold. In this case right now, percentage of assets invested is at the percentage for technology is high. So again, just highlighting the fact that we have technology leading, and technology is just such a large part of the broader market, something I wanted to highlight. Headed back into our regular programming with our heat map. Technology coming in that top spot, trading week 1.19%. Money flowed heavily into technology, and honestly, it was really the only place that we saw a big chunk of flows. Second for the trading week was communication services. As you see, this is a little bit of a muted green, 0.17%, so not hitting that 0.4 threshold that we like to see for significance. What happened? The market decided, largely it seems, some of these AI companies were reporting some earnings, and there was some speculation that they weren't going to have a lot of earnings attached to AI. But for whatever reason, money flowed into technology. It flowed pretty much out of everywhere else, outside of these top 5, showing a little bit positive, but these were very light flows. So money coming out of energy, industrials, utilities, financials, consumer staples, and healthcare. I think a large part of the market was defensively aligned, and many of these in the bottom are a little bit more in that defensive nature, especially healthcare, consumer staples. Definitely a little bit more of those defensive sectors, utilities in that same boat, industrials, energy, all those things have to do a little bit with the market being risk off. The market is now clearly risk on, and money flowing very aggressively into technology. So this is kind of an interesting heat map to see, because we overall last week we had 5 of 5 up days in terms of assets flowing into the S&P 5 or into the 11 sector spiders. We were up 3.4%. Just last week, if you added up all the sector AUMs. So really seeing that kind of strength, but all that money realigning itself and moving itself into technology, a little bit of communication services. It's a good time to talk sector AUM. This was May 30th. We're starting to get, kind of our all clear situation here in that geopolitical with the ceasefire and things of that nature, and it's been off like a shot. So, we had that in early April. Was the initiation of the ceasefire, and the market took off from there. We are now at record all-time highs in terms of adding up, when you add up the 11 sector spiders AUM, crowding up near this $365 billion. It really just took off. We've been, lights out since we crossed over on the 21-day moving average, and the market's really gone almost straight up since. So, really right now, clear from this indicator, clear risk on for the market. We are risk on both in CPM, ACE, and A6. And obviously with this new mark coming with technology, this is also realigning our overall table to being more risk appetite, right? Consumer discretionary starting to come up here, that 8 to 7 to 3. Communication services, that's a risk on bet, and so is technology. So really seeing the market flipped kind of on a dime here to re-engage to the risk on. Heading into our rainbows. Materials getting that middle favored. In terms of its relative performance, it is going to be a difficult situation here to relatively outperform the market when it is moving this aggressively up. So there is a little bit of a kind of a misnomer between what the price chart's doing and what the relative performance chart is doing. Overall, still in an uptrend though for materials in terms of relative performance versus the S&P 500. But money flowing into materials in that nice middle favorite area, but seeing a little bit of a downturn on the relative performance. This is going to be broadly what we're going to see on these rainbow charts, with the exception of technology outperforming the broader S&P 500, coming up a little bit on these resistance levels from the relative performance side of the chart. Technology really taking off, getting up into that, crowding in on that upper favored. Still have a little bit of that weakness on the strategic quarter, but we had such strong outflows here that it's going to take a little bit of time for all of those to roll off. But overall, looking pretty strong. Again, 1.19% increase. That's kind of how we're tracking those flows on that trading week. So things looking really, really strong for technology. Consumer discretionary. I wanted to highlight consumer discretionary because looks like we started to bottom out on that relative performance versus SPY here, heading in nice, strong direction, which again, with the broader S&P 500 going up so fast, having this little kind of spurt of outperformance versus the S&P 500 is pretty impressive. It is not a SEAF signal yet, but it is a place to watch. I really very much like the skew that we are seeing on consumer discretionary from 8 to 7 to 3. What we are missing is strong flows. Not seeing a ton of, almost 0.1% a change in the positive. So most of the money really just flowing into technology, but consumer discretionary is still looking pretty good. This is a place that we're going to want to watch. I want to see some stronger flows to come into consumer discretionary. It's going to push us up into that favored, and we're not quite there yet. So just an area to watch for consumer discretionary. Healthcare, wanted to highlight the bottom, negative 0.38% leaving on the trading week. Really seeing that underperformance versus the S&P 500, sitting down in a void, money flowing out of healthcare in all three time periods, and its overall ranking of 30. So healthcare is currently a place to avoid. Last, but right in the middle, I guess. Consumer discretion, communication services. Communication services coming in, still kind of trailing a little bit on the technical month and strategic quarter after being at the bottom for a little, having a little bit of time spent to avoid, but seeing some strength on that, coming with a 2 on that trading week, putting us into that low favored ranking. We'd like to see some continued flows into communication services. The price chart obviously looks a lot better than the relative performance chart, but like I mentioned, with the S&P 500 kind of being as aggressively up as it is, even sectors that are seeing assets flow into it could have a little bit of a skew on the relative performance side, just because it's tough to keep pace with the market when it's going up so much. But communication services coming in at over 3, and if we continue this trend, like I said, I really like the positive skew when we start to see this go from 7 to 6 to 2. That kind of starts to indicate a turn or a trend change. So we would need to see another strong week next week to really start to confirm that this is really going to be pushing through. But that's what the SEAF model does really good. It starts to pick up these things as they turn. So, communication services is one of those where we're starting to turn up. It's got a little bit of a lower score, but if we can continue to get those asset flows, we catch that trend nice and early. And if it dies out, then we go and get the next sector that's up. So kind of a feature here in terms of the SEAF model, and why we are able to jump on some of these trends early is because we catch these tide changes, it comes in with that top three, and then we could ride this thing up if it has momentum. And if it, like I said, if it peters out, then we pick up the next thing. It could be just, consumer discretionary or something else that kind of comes out of the woodwork, depending on what's going on in the broader market. Especially with the markets being controlled by really being affected by geopolitics. A tweet or a misplaced saying, or something happening over in the Middle East could kind of flip this thing back on its head. But as of right now, we are in that risk on technology leading the market type situation. So we're going to continue to follow those trends. That is all I have for this week. I look forward to breaking down the SEAF model with you all next week, and thank you.